Hello, everybody. So today I want to talk about LifeMD. Of course, they reported their Q1 last night, had the call, perused through the call, looked at everything, and it looks good. LifeMD, of course, is mini HIMSS, as I call it, or baby HIMSS, as I call it. It's HIMSS, but even cheaper. It's HIMSS, but 3 or 4 years ago. This is the way I treat LifeMD. This is the way I see LifeMD. So let's talk a little bit about LifeMD. We're going to start with the numbers, because I know most of you watch this video for numbers. So when we talk about the numbers, they've updated their revenue forecast. They raised it. They're predicting now 28% year-over-year revenue growth. And keep in mind, of course, that this growth is slowed down by WorkSimpli. Actually, the telehealth business is growing closer to 34%, but because they own WorkSimpli, which is the 60 million right here, because they own WorkSimpli, they are showing a overall top line growth of only 28%, and that's because WorkSimpli is only growing at 11 to 15% revenue growth. And so the talk of this company, of course, is always to try to sell WorkSimpli. Will they ever sell WorkSimpli to simplify this in the eyes of Wall Street? I think they should. It's better, though, right now, because WorkSimpli is growing again, which means that they may find a buyer for WorkSimpli. And once they sell WorkSimpli, which is a business that has nothing to do with LifeMD, once they sell that business, they should have a much clearer picture to Wall Street, and they should be putting out much better numbers. And you can see all of the presentation, of course, is about LifeMD. LifeMD, the main business. LifeMD is showing some operating leverage right now. They're predicting 21 million in adjusted EBITDA for the full year, so that's outstanding. The gross margin is roughly stable, actually slightly down, but up overall if you look over the years. And that's, of course, due to the GLP-1s, right? Because GLP-1s have a little lower margins than generic ED drugs. And of course, the telehealth ad spend, it was down, and it seems to have stabilized. This is a key balance for these companies. Is you gotta spend ads, and how much you spend in ads is going to dictate how quickly you grow. And Wall Street is asking for that peculiar balance between growth and profits. And let's face it, Wall Street, unfortunately, still today focuses much more on profits than they should, in my view. They focus too much on getting that dollar and getting that fiat through the door, while they should focus on, in my view, making the business as large as possible, as disruptive as possible. I would much rather own a business than own a business with a bunch of cash on the balance sheet. Anyways, that's enough for the aside. Let's look at the growth numbers. So the growth numbers are actually excellent. If you look, this is the part of a call where we talk about it. Their total revenues year over year compared to the prior period was up 49%. So I kind of drew it here because it's not updated yet. Compared to 4 quarters ago, you're up 49% year over year on the revenue growth. That includes LifeMD. If you exclude, that includes WorkSimpli. If you exclude WorkSimpli, the growth year over year, the core telehealth business grew 70% year over year if you exclude WorkSimpli. So as a reminder, HIMSS that I covered yesterday, HIMSS grew 111% year over year. This business is growing the telehealth business at 70% year over year, but it is being dragged down by WorkSimpli. They're showing the top line, and of course, Wall Street doesn't dig too much in the details, but they're showing a top line growth of only 49%. That's because of WorkSimpli that they need to sell. Anyways, let's look at the valuation. LifeMD versus HIMSS, much cheaper than HIMSS. It's actually half as cheap as HIMSS right now on a 0.06 on enterprise value over gross profit over revenue growth. HIMSS has a 0.12. It's trading at roughly 1.16 times forward revenue. HIMSS is trading at 3.7 times forward revenue. In either case, it is cheap, but LifeMD is really showing something super cheap. Enterprise value divided by EBITDA on HIMSS is actually under a 10. So the price to cash flow, EBITDA is my preferred proxy for cash flow. That price to cash flow is under a 10, right? For a business that is actually growing the core at 70% year over year for a business that is in a very hot field and that has developed, frankly, impressive setups. Maybe not as good as HIMSS, maybe not as advanced as HIMSS. I don't know. I'm not a medical professional. I don't use it on the back end. But it seems pretty good to me. And this is all. This is part of another conversation, is like what's going to happen to companies like Epic, right, who just rely on their moat. Today, if you're a new company and you're getting started in telehealth, you can build your own software. They were able to build their own software just fine for industry, for partners, for providers, for patients, and understandably, right, because WorkSimpli is a software business. This is a business that has some software roots, right, and they've built their end-to-end platform. And so, like I said, it's a mini HIMSS. They have a total addressable market, and they're addressing conditions that HIMSS has not addressed yet because of their partnership with the lab companies. They've had partnerships with the lab companies, which has allowed their doctors to prescribe things that HIMSS is not prescribing yet, like HRT. HIMSS is not prescribing HRT because they don't have the labs partnership yet, but they have Tribe. So they're going to expand to HRT with Tribe, which is going to allow people to do labs. So that's one of the key distinctions. I used to always describe LifeMD and HIMSS. HIMSS is really the minor stuff that doesn't need a blood sample, and LifeMD is the minor and the medium stuff, because LifeMD has the capability to get your blood analyzed via LabCorp, via a local lab company. HIMSS is going to have that ability hopefully this year with Tribe and the Tribe acquisition. But anyways, let's talk about the major developments. They've launched, so that's what I told you, they're ahead on some things because of their partnership with LabCorp and Quest. They've launched the hormone replacement therapy. They've launched testosterone. Okay, and it's going strong, they say on the call. And this is actually very relevant for HIMSS too. 40% of the customers who have enrolled in HRT were initially RexMD customers. And RexMD was mostly ED drugs. So what does that tell you about HIMSS? The moment they launch HRT at HIMSS, like they have a cross-selling customer base right away. They have a basic cohort. And as Yemi said on the HIMSS call, some of them have been with them for more than 5 years, right? Some of them have been on there a very long time taking ED drugs. Now, all of a sudden, you can upsell HRT on top of ED drugs. This is outstanding for business. This is just as bullish for LifeMD as it is for HIMSS when HIMSS eventually launches that. LifeMD, as far as the execution goes for now, in my view, is actually slightly closer to the Netflix of doctor, although I have little doubt that HIMSS will enter that business at some point and offer just a doctor subscription with a doctor visit a month for a doctor visit when you need it. I need to analyze it because they changed it a little bit compared to what it used to be, but this is their doctor plan, LifeMD Plus. A LifeMD membership unlocks the following benefits: urgent care and primary care. That's probably your physical, right? It's like primary care is your physical. So same day prescription, refilling the prescription, personalized health and wellness offering, virtual care through secure messaging and video visits, and exclusive member only access program. $19 a month. That's a Netflix subscription for doctor access. And you need to read the fine print. I'm sure this includes one physical and maybe one urgent visit, and it's like $19 a month. They used to have more expensive plans. One of them was something like $39 a month for one office visit a month. So I don't know how they really code it. If they offer you as many visits as you need, that would be an unbelievable deal. I still think this is an outstanding deal. To me, this is the future. To me, most people will just have a doctor prescription, and if they have a need, they can just get the LifeMD app or get the HIMSS app, and boom, the doctor shows up 24 hours. In their call, actually, they said that the average American needed at something like a 21-day wait time on average to see a MD in the physical world. And of course, they have an option where it's as soon as possible. You can write, I want to see an MD as soon as possible. And if you click that, you may see an MD within the hour. That's how good these companies are, these platforms of doctors are. That's how good they are. They have a little bit more expensive prescriptions, of course, for the GLP-1 programs and their oral medication, which is their oral kit. It's probably a metformin-based type of weight loss pill. They offer both Wegovy and Zepbound via NovoCare and Lilly Direct. Of course, Ro only offers Zepbound via Lilly Direct. Hims only offers Wegovy via Novo. What does that tell you? That tells you that they're the small fish. The small fish has no issue striking a partnership with Lilly. But Hims, of course, is not able to do that, right? So it's because Hims is 50% of the market share. They're a small fish, so they actually have both. So this is actually, technically a better offering, right? Because the doctor is really, really free to choose on that one. I'm not saying that the doctor is not free to choose on Hims. The doctor is entirely free to choose on Hims, but if the doctor ends up saying on Hims that you need to go for Zepbound, they're going to send the customer away. Dudum on Hims was very clear on the call, but they don't tell the customers, the doctors, what to prescribe. I think it's very important to say that. Anyways, they're going strong after virtual care patients for Medicare recipients. They're the only ones who do that. I am on a wait and see approach on this. Trying to offer telehealth to Medicare recipients. I don't know how well Medicare pays. I hear it's better than cash pay. Not cash pay, but I hear it's better than insurance. I hear Medicare is a much better payer than your typical insurance companies that you would have before 65. And so I guess that's why we're going after that, accepting some Medicare. There's probably an easier, more established process to get reimbursement. But I'm still not too fond of the complexity, and also, I'm just gonna refrain from saying that. I was gonna say, does the 65 plus population, are they comfortable with virtual care? And in my mind, absolutely yes. The events of 2020 have shown us one thing: is that the 65 plus are perfectly fine with the digital solutions. Sometimes they love it as much, sometimes they love it as much or more than Gen Z and millennials. Anyways, they're launching a women's health prescription. That's their optimal human health acquisition. It's mostly something related to osteoporosis, right? Osteoporosis is what you get after menopause. So they're launching it. I don't know how quick they're going to be, but are they going to be even quicker than Hims to have a menopause offering? Perhaps. That's pretty impressive. And of course, they have their Quest and LabCorp partnership, which is still standing. So they don't do mail-in labs like Hims is about to do. And so I would argue it's probably less profitable to partner with Quest and LabCorp. It's probably less profitable to partner with a legacy company, I would argue. But they've changed on the pharmacy point, right? They used to give coupons. LifeMD used to give you coupons a la GoodRx, and you would just get your coupon to your local pharmacy and get your drug. And they've launched their own pharmacy services. It's a small facility. I think it's like 25,000 square foot. Nothing as big as Hims, but you gotta start small. They have their own pharmacy, mail-in order pharmacy as they used to be called, and they're gonna grow that, right? They're gonna funnel their business to their pharmacy. That's what you should do. That's vertical integration right there. You're gonna funnel your business towards your pharmacy. Hopefully, they come up with their own solution to maybe one day entirely cut out Quest and LabCorp from their business, and actually send them, a Lancet and a vial through the mail, and people just doing their labs through the mail. That's the next step. These companies, Hims is of course the trailblazer in this, but they're trying to be fully vertically integrated healthcare companies, trying to go after all of the verticals and owning the value chain from the pharmacy to the manufacturing of the drug to the doctor visits and to the follow-up. So these companies, in my view, they could be much bigger in the future. Mini Hims remains Mini Hims. Mini Hims lags Hims by about 2 to 3 years, and LifeMD is mini Hims. And just know it's a compliment. In my book, this is a compliment to be called a mini Hims. So this was not financial advice, not investment advice. This is entertainment, only entertainment. Please please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.